Nampak today announced the half-year results for 6 months period ending 31st of March 2015. While operating profit was down 9%, we were particularly pleased that the mix of our operating profit changed substantially. As is part of the Nampak strategy, the contribution from the rest of Africa business has now increased by 22% from 27% during the comparable period last year to 38% during this current period under review. We feel that this is a vindication of the strategy going forward, and we remain excited about the prospects for further growth on the African continent. To put the results into context, we think that it's important to look at some of the once-off impacts that have muddied the waters of the results that we have reported. First off, which is a prominent feature of our results, is a 70 million rand loss in our glass business. As we have signaled to the market prior to the release of these results, we were expecting a loss. I suspect that the magnitude of the loss has come as somewhat of a disappointment to the market, as it has to us. We are taking very decisive steps to address the loss-making situation at our glass factory. We have changed out a management team, and we are putting in place the correct technical expertise to make sure that we improve our productivity ratios in that business as soon as possible. It is a big ship. It takes some time to turn around, but we're confident that the business holds a lot of potential. A further significant development during the half year under review was the successful conclusion of an agreement with private equity firm Ethos for the sale of our corrugated and tissue business. We have received proceeds of 1.6 billion rand for those businesses, which obviously has a beneficial impact on our gearing and also enables us to pursue further growth projects on the African continent, particularly in countries like Ethiopia, like Nigeria, and also Angola. We are continuing on our growth path on the African continent. As we speak, we are commissioning a second beverage can line in Angola. The first line, producing 800 million cans per annum, is completely sold out, and the second line is expected to ramp up to its full capacity of 1 billion cans per annum within the next 12 months. So demand for beverage cans in Angola continues to grow very, very strongly indeed. As a result of the drop in the oil price, the Nigerian economy experienced some headwinds, which had an impact on the performance of our paper and general purpose can business in that country. Altogether, we incurred forex losses of around about 24 million rand. But again, we are confident that these forex losses were once-offs and that we will return to the sort of margins that we saw previously in those businesses as the year carries on. I think a further important factor to note is that the prior period contained a positive impact of a conversion of a loan to the Angola beverage can business of 100 million rand, and that obviously is absent from this year's result. Within the context of the somewhat disappointing results that we have reported for the past 6 months, we are, however, still confident that the strategic value proposition for Nampak in the medium to long term remains firmly intact. The African consumer is awakening, demand is growing, and we think that we're extremely well positioned to participate in that growth.